Good morning, you're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day, but first let's kick off with our top story. Higher food prices drove inflation in August to 4.9%, the highest since January of 2019. Data from the Philippine Statistics Authority showed that the quicker inflation was mainly brought by a faster rise in the prices of food and non-alcoholic beverages commodity group. By specific food items, double-digit annual growth rates were noted in the indices of meat at 16.4%, fish at 12.4%, and vegetables at 15.7%. The PSA noted that the higher inflation in vegetable prices was due to weather conditions, restrictions in certain areas, and higher transport costs, while the higher inflation in fish was due to supply issues. The August inflation was higher than the 4% recorded in July this year and the 2.4% in August of 2020. Last month's consumer price index was on the upper end of the Bangko Central's inflation forecast of 4.1 to 4.9%. Besides the food and non-alcoholic beverages basket, annual increases were also recorded in alcohol and tobacco, as well as housing, water and electricity, and transport. Now, Metro Manila will be returning under GCQ that's starting tomorrow. That's as the government shifts to more targeted lockdowns. The IATF approved a downgrade to GCQ for larger parts of the economy, or the country rather, for the rest of the month. But at the same time, it approved a shift to granular lockdowns. Malacanang called this a pilot test of the localized lockdown strategy, but LGUs have been doing this since last year. The health department said these localized interventions can help us dodge the worst case scenario, where we are projected to hit about 43,000 new cases daily. But Undersecretary Leopoldo Vega also said granular lockdown should be accompanied by intensive testing and contact tracing to curb virus transmission. Let's kick off the markets report with a health check on the local unit after that quite surprising inflation print. You could see, at least as of yesterday, the peso having strengthened ahead of that print at 49.958 to the greenback. Of course, this comes as the prices in August rose above even the highest of the 21 estimates in a Bloomberg survey of economists that was already at 4.6%. We're still rising much higher than that. Now, another thing to be watching out for is how the equities market is, of course, reacting to this. Interestingly, we see the index up by 0.15% this morning. That's up to 6887.67. And this, of course, happens as across the board, you can see, at least in Asia Pacific, countries easing vaccine restrictions. You've got Thailand reopening for tourism, Indonesia conducting trials in 20 cities to also reopen. New Zealand, much of it at least, exited the lockdown. And of course, in the Philippines, today will be our last day under MECQ before it's back to GCQ, meaning back to dine-in. And speaking of dine-in, let's take a quick peek at the restaurant tours. This morning, you can see here, Max is up by 2.17%. Just in the first 4 minutes of trade, JFC paring back, but it had already surged yesterday, even ahead of this announcement. And Shakey's up by 2.5%. So those restaurants definitely enjoying a bump up amid the last day before they are able to take in customers yet again. Let's take a look at the malls and whether foot traffic is, looked at as well. You can see on my terminal here, more of them tilted towards the upside. SM Prime in particular up by 1% together with RLC, Vista Land, and Mega World. Only Ayala Land is sitting out this rally, which is down by 0.7%. Meanwhile, here are the other headlines we're keeping our eyes on. The Japan Credit Rating Agency has affirmed the Philippines as A- credit rating, citing the economy's resilience amid the pandemic. The debt watcher also kept the stable outlook on the rating, which means this will likely be maintained in the next 12 to 18 months. The JCR said that the ratings mainly reflect the country's high and sustainable economic growth performance, as evidenced by relatively low debt and unimpaired fiscal soundness. This comes 15 months since the credit rating agency upgraded the country's rating to A- from BBB+. However, JCR cited the delayed recovery in economic activity due to tighter mobility restrictions amid a Delta driven surge in COVID 19 cases. That's why it expects the economy to log a slow 4 to 5% growth in 2021, matching the full year target of the government. Now, the Finance Department rejected a proposed legislation that would cap the debt ratio at 50% of GDP. The agency cited the need to maintain flexibility, especially in times of crisis. This as lawmakers expressed concern over the massive loans incurred by the government since the pandemic began. Finance Secretary Sonny Dominguez said he doesn't see the need to make the country very inflexible by implementing a debt cap. As of end June, the government's debt stock is already equivalent to 60.4% of GDP, up from 54.6% at the end of 2020 and much higher than the pre crisis level of less than 40% in 2019. August inflation surprises economists with food supply particularly threatening. And here to share with us his latest views on the economy or the economic recovery, if we have one, we have with us Vic Abola, Executive Director, Strategic Business Economics Program at UA&P. Good morning, Prof, and welcome.
Good morning, Dan.
Sir, of course, very surprising print here, 4.9%. You had been expecting 4.3%, very close to the median of 4.4%. What is going on here? Why would it peak? It is the highest since the pandemic began, more or less. Wala nang ang demand in August dahil nag-lockdown. And yet, this is
Yeah.
what we're seeing.
Well, it's true. We had weather problems that compounded the problem of mobility. Uh, I think that the lockdown has really made a big dent on the movement of goods and people, actually, because it's really on the supply side that we're seeing the inflation. I noticed that vegetables went up the highest, and that comes from Baguio basically. And then you have meat prices, getting things out of the port, and take some time and all of that. And fish, if people are so scared to get out and so move them because it's really I would say, a supply problem that we have been facing.
Sir, does this mean that the way that the government or this recent lockdowns has been handled has not improved from the previous times? If we are unable to at least have a steady flow of very very basic goods at prices that we can afford.
Well, I've been advocating for more than a year now that the lockdowns have to be more localized because that's easier to control, and you will allow people to move and to go to work, and I think that's one of the factors that have contributed to this inflation. Uh, However, apart from localized lockdowns, I also advocated for a real solution to the public transportation because you cannot remain at 50% or 30% of capacity. They have to be probably equipped with air exchangers and like that. And that's what they do in the planes. In the US, in airplanes, they can accept as much as they want because the airplanes have an automatic air exchanger. Every minute, it changes the air. So that is something that, of course, needs some investment, but that's where government comes in to assist not only the bus companies but the people themselves, no? To be able to go to work with confidence, and because we're now quite used to taking the necessary precautions.
Sir, let's get back to the granular lockdowns in just a bit. But you did mention transportation being a key factor here. Do you see any signs whether this 4.9% print is just the beginning of continued above target inflation that we will be revisiting yet again after we already hit the 4% before, or is this a temporary spike during the month of August? If we reopen the
Yeah.
economy, would that not have more demand driven rise in prices?
I think that this is a very unusual spike, because the weather conditions, as said. and food prices normally are quite volatile. So that's why it's important thing to look at is the core inflation, and I think that's fairly much steady. And I uh, I believe that actually we'll get into a negative territory next month with this kind of increase this month. So expect negative territory next month, and then we'll get back to below 4% by even by as early as November or at the latest December.
Okay, sir, you mentioned the granular lockdowns. Tell us, to what extent will this have, or is there any data or understanding of how much economic impact this would have compared to, let's say, the GCQ that we had before or the MECQ that we have right now?
The thing is that with GCQ, the you are really preventing people in general to move. You're giving exceptions, right, to move, which is the opposite to a granular lockdown. The granular lockdown pinpoints areas or specific points where you have a surge in cases, or at least you know there are cases there, so you isolate that and you do a hard lockdown. I'm in favor of hard lockdowns for very localized groups. Maybe a street level, two streets level, or up the most barangay level. You know? And that enables greater movement not only of people but also of transport, because the transportation of goods is also contributing to these difficulties that we're seeing in the supply chains.
Sir, how satisfied are you with the fact that even with the rising cases in the Delta, we've hit 4 straight days of above 20,000 cases. We are reopening the economy. Is now the time to be doing this?
Yeah, if you will notice, while there's been rising from 15,000, now we're above 20,000. But if you look at the deaths, the number of deaths, we have kept it basically below 200 at a fairly stable pace. And that means that there's transmission usually happens. This is a very, very contagious variant, but the severity is not as big as great as the original one, because these viruses mutate, and when they mutate, it becomes less deadly.
Okay.
And I think the government may have been scaring the people too much, because the workers, we need the workers to work to be able to produce. Otherwise, this is what happens.
And speaking of workers, sir, we just have this just in right now from the Philippine Statistics Authority. July unemployment is at 6.9%. Your quick reaction to that going down from the 7.7% print in June?
We'll have to see. I have to look at the data first because, yes, the unemployment rate. You know what I'd look at every month is not the unemployment rate. That's secondary. What I look at is the number of jobs that are being created. If it's still positive, because up to last month in July, it was still positive. So if it's positive, I think it slows down definitely in July. So because really the unemployment rate depends quite a bit on what they call the labor participation rate, because not everybody is counted as in the labor force if they're not looking for a job, or well, they decide to sort of have a semi-retirement approach to life. No?
Okay, sir, are you expecting this number to rise again? Of course, this is the July print, so August saw the lockdowns and again continuing towards the end of the year. As you mentioned, sir, you're looking at the number of jobs created. Can we say that despite the unemployment figures, we were able to anyway recover a lot of the jobs that we lost from the beginning of the pandemic in
Uh,
2020?
if we look at data, it does say that we have recovered the jobs that were lost. Now, however, you remember that we are adding 1.1 million people into the labor force every year. And that is what we've not been able to provide for. So there's a lot of unemployment for the young. And well, but I do expect that starting September with this, easing up, uh, will help bring back, the economy into a faster pace.
Okay, so are you still optimistic about the fourth quarter given this higher than expected inflation print? And as you mentioned, the statistics that we're seeing when it comes to labor force participation.
Fourth quarter, well, more or less. I mean, I'm on the neutral side, and I'm neither optimistic nor pessimistic because the problem with the fourth quarter is that you have a much higher base last year.
Okay.
So we're not going to see double-digit growth, in the fourth quarter. The third quarter, even with the lockdowns, probably much less than the second quarter. But we'll certainly end up with where the government has now adjusted downward its growth forecast for the year. No?
Do you think that we will be meeting that anyway, the 4 to 5%?
I think 4 to 5% on the lower side should be doable, especially given the election spending that usually precedes even the election year. So because there's a lot of organization and propaganda to get into the race by December. But I'm not looking at specific people who will run. I leave that up to December when things sort of become clearer.
Okay. Sir, final question. Secretary Dominguez says he's not amenable to keeping the caps of debt to the GDP ratio at 50%. He says we need to be flexible. Your thoughts on that? Is there a possibility that we will be breaking above the 50% level? And should we be doing this just to address our shortage, of course, in funding?
Yeah, of course. I'm not in favor of putting a cap because even during the our worst times, during GMA we hit 78% of GDP, and then we recovered, and in like 5 years time we brought it down to 60% and lower actually. Uh, Now if we grow, because growth is the key here, if we are able to go back as fast as we were before, then the ratio will automatically go down because I don't think interest rates are going to rise anytime soon, even though you have seen recovery in the US, etc. But the reality is that the longer term studies done by the Fed says that real interest rates are going to be very low compared to the historical standards, like 0.5%.
Okay.
You know,
Okay, so we might need to actually be very flexible with that as we, of course.
I believe so. I believe so. Yeah.
All right. Thank you so much for those insights. Of course, that was Professor Vic Abola, Executive Director, Strategic
Thank
Business
you
and
too. And
University.
nice to be with you then.
Thank you, sir. And that's a first look into the business day. Today's Tuesday, September 7, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are one news.